Those made it.
Good day, good people. Welcome to today's video. Today we're going to tackle two questions, which are: what is forex trading and why should you trade forex anyway? Please feel free to take notes and ask any questions in the comment section down below. Let's start. What is forex trading? The word forex is short for foreign exchange, which is the largest financial market in the world. The foreign exchange market is also referred to as retail forex, FX, spot forex, or simply spot. Basically, you are trading money for money. You are simultaneously buying one currency and selling the other. Currencies are traded through a broker and are paired together. Hence, they are called currency pairs. For example, pairs like the euro and the US dollar, or pairs like the British pound and the Japanese yen. But here is the part that confuses people, the part that used to confuse even me. Which of the two currencies are you buying when you buy, and which of the two currencies are you selling when you sell? To answer that question, it's very simple, but I have to explain the base and quote concept first. Between a currency pair, there is a base and there is a quote. The base is the first currency on the left before the slash or dash, whatever the case may be. The quote is the second currency on the right after the slash or dash. For example, when it comes to a currency pair such as Euro USD, the euro is the base, the dollar is the quote. If you find this very confusing, feel free to comment down below so I can help you out. So now that I've explained the base and quote concept, let's answer the question: which of the two currencies are you buying when you buy or selling when you sell? Let's continue to use Euro USD as an example. When you place a buy position on Euro USD, you are simultaneously buying the euro and selling the dollar. And when you place a sell position, you are selling the euro and simultaneously buying the dollar. I hope this makes sense. All of these things are taking place on the trading platform provided by your broker of choosing. You are not physically buying any currencies or selling any currencies. What is also traded in the forex market is commodities such as gold and indices such as Nasdaq, which would appear as NAS 100 or even US 100, and cryptocurrencies such as Bitcoin. The foreign exchange market is active from Monday 12 a.m. GMT and closes Friday 11:59 p.m. GMT. You can place a trade anytime between Monday and Friday and anytime between the sessions, depending on your strategy. Why should you trade the forex market? The main and obvious reason for you to trade the forex market is liquidity. Like I said in the beginning of the video, the forex market is the largest financial market in the world. An average of $6.6 trillion is exchanged per day in the forex market. This is how the 6.6 trillion is broken down. 2 trillion comes from spot transactions, 1 trillion comes from outright forwards, 3.2 trillion comes from FX swaps, 108 billion comes from currency swaps, and the rest of the 294 billion comes from options and other products. This is enormous compared to the stock market that averages 169 billion a day. So liquidity is the first and most obvious reason why you should trade the forex market. But most importantly, besides liquidity, risk is in your hands. People think that forex is extremely risky, which is true. But depending on your risk management, you have full control over your risk. You are the one who decides the amount of money that you deposit in the broker. You are the one who decides the lot size you're going to use when placing a trade. You are the one who decides where you're going to place your stop loss to protect your capital, etc., etc. You have the control over risk. This also makes the forex market one of the safest markets in the world compared to other markets. Thank you for making it this far into the video. Until next time, you have yourself a nice day. Peace out.